The global chaos associated with the Covid-19 pandemic has severe impacts on global financial markets, including stock, bond, and commodity. This includes gold and oil markets. The collapse of the agreement between Russia and Saudi Arabia oil price war, crushing the crude oil prices and the stock market in March 2020. This is the result of the coronavirus pandemic. In the last week of February 2020, the Dow Jones Industrial Average and FTSE 100 dropped more than 3% as the coronavirus outbreak spread worsened substantially outside China over the weekend. Followed benchmark indices falling sharply in continental Europe after steep declines across Asia. The DAX, CAC 40 and IBEX 35 each fell by about 4%. And the FTSE MIB fell over 5%. Due to the mounting worries about the coronavirus outbreak, various U.S. stock market indices, including the Nasdaq 100, the S&P 500 index, and the Dow Jones Industrial Average posted their sharpest falls since 2008, with the Dow falling 1,191 points. It's the largest one-day drop since the 2008 financial crisis. On 28 February 2020, stock markets worldwide reported their largest single-week declines since the 2008 financial crisis. On the morning of 9 March, the S&P 500 fell 7% in 4 minutes after the exchange opened, triggering a circuit breaker for the first time since the financial crisis of 2007 and 8, and halting trading for 15 minutes. At the end of trading, stock markets worldwide saw massive declines, with the STOXX Europe 600 falling to more than 20% below its peak earlier in the year, with the Dow Jones Industrial Average eclipsing the previous one-day decline record on 27 February by falling 2,014 points or 7.8%. The yield on 10-year and 30-year U.S. Treasury securities hit new record lows, with the 30-year securities falling below 1% for the first time in history. In South Korea, the first onshore debt offering in 3 weeks was successful on 9 April. However, the yields on won-dominated debt remained high amidst general pessimism about the economic outlook during the pandemic. Following the passage of the U.S. Coronavirus Aid, Relief, and Economic Security Act, the Fed announced on 9 April that it would buy up to $2.3 trillion in debt from the U.S. market, including from so-called fallen angels companies that were downgraded from investment grade to junk during the chaos of March. The announcement sparked a rally in junk bond exchange-traded funds, as well as individual junk bonds. The New York Times reported on 19 April that U.S. corporations had drawn more than $200 billion from existing credit lines during the COVID-19 crisis, far more than had been extended in the 2008 crisis. On 12 May, the Fed began buying corporate bond ETFs for the first time in its history. It stated its intention to buy bonds directly in the near future. And that's how COVID-19, or the coronavirus, destabilized the global stock market. And that's how this pandemic works globally. Don't forget to subscribe and click the bell to be notified of my latest video.